Hi, I'm Julia from Revel Realty, and I love everything about houses. And yes, that includes interest rate announcements. And today, the Bank of Canada did another one. So today, September 6th, 2023, the Bank of Canada announced that they're holding rates steady. So this is great news for really everyone who has a mortgage, since it's been quite the pinch this year. It's been quite the roller coaster of ups and downs with interest rates, mostly ups. Who are we kidding? But here's what I'm expecting to happen. We're now entering the fall market. Usually the spring and the fall markets are the most busy for buying and selling throughout the year. And so with this hold of interest rates at 5%, I'm expecting more buyers to kind of come out this fall to be looking for houses. The reason that I say this is because there's still a housing shortage and inventory is still relatively low. Now, that being said, it is going up a little bit, since the houses that haven't been selling because they're sitting on the market, they are still there and newer houses are coming on. So inventory is increasing a little bit and prices are declining. Mostly above 800,000 in the Hamilton, Burlington area is where we're not seeing a whole lot of movement, but anything below the 800,000 mark, we're still seeing a decent amount of change there. Rents are still high and landlords are feeling the pinch too, because if they bought in the last few years and they have a mortgage, their prices are going up as well in terms of how much it's costing them to carry the property, and their rents aren't necessarily covering their costs anymore since rates have gone up quite a lot. So that's something to consider if you're a renter. Yes, you're feeling the squeeze, but consider too that your landlord may be as well. So we're kind of all in this together. So another thing I wanted to talk about is serviceable income, and that's basically what the banks look at and lenders look at when they are thinking about giving you money for a home or a mortgage. So essentially, they want to see that you're consistently earning money. So they like seeing that monthly or bi-weekly or weekly paycheck coming in, and with that, they assume that you will continue to work at that job and make that same amount of money. If you are stockpiling money in your bank, but you don't want to spend it on your mortgage, then it can be a little bit trickier, because they think that you could just go out and have a little shopping spree and spend it all, whereas serviceable income is more predictable. Entrepreneurs, lending can be a little bit tricky if you're solely commission based. So commission based entrepreneurs, you're looking at the last 2 years of earnings, and that's what they're basing your funding amount off of. So just some things to keep in mind. The next interest rate announcement will be on October 25th. I'll see you then.